If you go back to the 1929, 1930s, the last time we had this degree of tariffs, they exacerbated the Great Depression. Trump called, too late, Powell a fool. A real failure in confidence is coming. Are you paying attention? I think Mr. Powell is stating the obvious. I think that Powell and Mr. Trump has done what they could to lower interest rates. They put a lot of pressure on the near term, and long term has risen without them. I think what you're beginning to see is the reassertion of control by the credit markets, what they used to call in the Clinton administration the bond vigilantes. Bond vigilantes are investors who he said had sold off the treasury bonds in protest against Fed policies they thought were too inflationary. There was some risk, if they lowered the long-term curve, that they would hold a treasury auction and nobody would show up. So I really think that what Mr. Powell did was acknowledge the obvious. The difference between the long-term rates and the short-term rates have been pretty dramatic despite concerns about equity markets. Normally, when there's concerns about equity markets, the real money, the big money, flees into the bond market, in particular the long bond market. But the fact that there's concerns about the equity market and the long bond market has still been sold off tells you that the Fed is losing control over the interest rate. Mr. Trump still doesn't want to admit the obvious. In the decade of the 1970s, U.S. inflated away their nominal obligations. According to the Office of Management and Budget, the US dollar is in absolute terms not relative to other currencies, but in absolute terms lost 75% of its purchasing power. What you could buy with $250 in 1970 cost you $1,000 in 1980, and by doing that, we made the nominal servicing of their obligations possible because the US didn't index taxes to inflation. That's what they're going to do again. Over the next 10 years, the US dollar will lose 75% of its purchasing power, which is how the US will fund the $100 trillion in off-balance sheet liabilities. They'll make the real debt $25 trillion while honoring the nominal obligation by devaluing the dollar. During the decade of the 70s, when the purchasing power of the dollar declined by 75%, the gold price ran 30 times.